In this presentation, we will enter vendors into QuickBooks Online as well as the beginning balances related to those vendors, which will help us to populate the information on the balance sheet related to accounts payable within QuickBooks Online. Here we are in our Get Great Guitars file. To see our objective, let's take a look first at the balance sheet report, and then that's going to be in the reports down below. We're going to be looking at our favorite report, that report being the balance sheet first. Let's open up that balance sheet. Then I'm going to scroll back up top. Going to be changing the dates up top from 01/01/20 to 12/31/20. This is the current year, or I'm going to run that report. This is the year that we are going to be entering the data in as of, starting January 1st, 2020. So what we want to do then is think about if we had our prior data from some other place, from the prior accounting system, and we want to report the fact that we owe people money at this point in time, as of January 1st, 2020, that would be reflected in an accounts payable. So we'd have a liability account that we would need to input into our system here. So now we're going to say, all right, now I've been entering these beginning balances in for the balance sheet accounts. We did accounts receivable, we did inventory, and now we need to do this accounts payable account. Now the accounts payable account, we could do with a journal entry. However, we might have a problem with the journal entry because we also need to assign the vendor. Just like with accounts receivable, we needed to have the amount and then the supporting information by customer who owes us the money. With the accounts payable, we need the amount on there, and we also need who we owe, which in this case would be the vendor, the people we have to actually pay. So that's what we're going to do here. For the balance sheet, that's one of our objectives. We want to have this amount to show up on the balance sheet as accounts payable, but we cannot simply do it with a journal entry because we need to add the vendor. The other objective we have is, of course, simply to add the vendors. So when we start up the new company file, we might have a bunch of vendors we would want to enter. Now note that that second objective might not be as relevant or important to just simply add the vendors, because typically you will be adding vendors as you do the data input. So in other words, as you basically enter the money going out, if you pay the bill or write checks or whatnot, you can add vendors at that point. If I was to add a bill, for example, and say that we have a bill, we could just basically add the vendor here, type in the vendor name, add the vendor. If we owe the telephone company, for example, of AT&T, we'll type in AT&T and say tab, and then it'll ask us if we want to add that vendor, and we typically do. And it's usually even easier to add the vendor than the customer, because we really don't care about most of the other information oftentimes. I don't need to know their address. I don't need to know their phone number if it's just normal vendors, right? I just want to know their name so I know how to fill out the check so I can write the check and get on with my business. Now, on the customer side, obviously you want all that information in because part of your business is getting the newsletters out or something like that and tracking all that information. If you have a large vendors you deal with a lot that you purchase all of your inventory from, for example, the people you buy inventory from are probably people you do want to have a lot more information about and be tracking that and make sure you're formulating a very good relationship with them. So in any case, that's how you would normally be making vendors. In other words, putting the customers in and making sure you have all your customer information is probably more valuable to most companies, and you want to be very careful on that. Make sure that you're transferring that information in from the prior system. Putting the vendor information in from the prior system, probably not as valuable. You may want to even do the whole vendor system over again, because you might have a lot of vendors you no longer even use, and you can use the fact that you're starting a new QuickBooks file to kind of clean out all the vendors that you don't want to be putting into the current system. And you could set up the vendors basically as you go. Okay, so now I'm going to close this back out. And then I'm going to duplicate this tab up top. I'm going to right click on this tab up top. We're going to duplicate it once again. We're going to duplicate that tab. Then I'm going to go back to the left and we're going to be entering our vendors. To do so, we're going to go down to the expenses tab. So we're on the expenses to the left. Up top, then we're going to have two tabs, the expenses and the vendors. We're going to be going over to the vendors. It's going to be looking very similar to the customers tab, similar kind of process. If I scroll down then, we currently have the one vendor, which is a default that was added by QuickBooks Online. So that's going to be the contractor down here. Scrolling back up, we have the new button. If I select the drop down on the new button, we can import the vendors. Now, I know you're probably grimacing that we're going to do another import. We're not going to do another import. I won't do that again. We've done it, 3 times now. So we won't import the vendors this time. We're just going to create a new vendor and put the beginning balance in as we create it. So we'll just deal with one vendor. So I'm going to say go to the new vendor, and we'll create a new vendor. Again, this is very similar to the customer screen. A whole lot of fields. We don't typically need a whole lot of fields with the vendor. So I'm going to add the name, which is going to be Epiphone, and that's going to be who we buy guitars from. We're going to buy and sell guitars in our example problem. And it's useful just to basically tab through this information then and just to see all the screens. So we could have title, first name, middle name, last name, so on, suffix. The display name, I'm going to say it's going to keep it as the Epiphone, of course. That's the only display name I have. You can see the drop down to pick up the other display names or type one in there. Use display name, yes, it's going to be, then we have the address down below, the city, state, and so on. Again, you may not need that information for most vendors, like a telephone company, utility company, or something like that. For valuable vendors, such as Epiphone would be for us, then we probably would want that information. We probably want to make sure we're building a good relationship. We might want to have notes in here to tell us about that vendor to keep a better relationship when we get the contact information with them. We can add attachments as well, email, phone numbers, other website, and then we have the billing rate. We could include the billing rate here and the terms. The terms are going to be basically the terms we have on the bills and whatnot. So how long before we have to pay them. And so then we have the opening balance, and that's what we want here. You would only be using the opening balance when you first set up your company account. And then you basically want to ignore the opening balance field in the future. Once your business is going and you set up the beginning balances, you don't want to be, touching the opening balance account generally at any point in time later, because you're going to be using the forms when you're actually going forward. So this is going to be, we're going to say that they owe us $15,000. And I'm going to do the same process here. We're going to start our year as of 2020, January 2020. Therefore, I don't want anything to enter into 2020 for the prior bookkeeping stuff. Therefore, I'm going to enter this as of 12/31/19, the last day of the prior year. All right, then I'm going to save that and see what happens with it. So we're going to go ahead and save that information. We should have added the vendor down below. So there's our new vendor that we have added, and we owe them $15,000. If I want to enter or change any detail to a particular vendor, we can select that vendor. We're going to have the more information. We have a similar screen as we had on the customer information. Then we can see our bill down here. Notice what was created, a bill, because that's the form that's attached to typically when we have a vendor, people we owe. So there's that information. If I want to edit this vendor, I can edit back up top. That'll take us back into the edit screen for the vendor, closing this back out. Also note that we have basically an expandable screen here that's going to give us a bit more of the summary type of information, and it's also one way that we can get back to the vendor screen. So I could then go back to the vendor screen here, back to the vendor screen, and now we're back to expenses and vendors up top. There's our two vendors down below. Let's see what the effect is on the balance sheet now. So if I go to the second tab where we have our balance sheet open, and I'm going to say, all right, what happened here? To see if it populated. Down here, I'm gonna let's rerun this report. I'm gonna hit enter to refresh it. Okay, I'm gonna scroll back down, and there we have it. Now, and notice what I did. If it doesn't refresh automatically, if something's, it should typically refresh automatically. I basically went up to the URL and just hit return just to rerun the URL, the web address. So then we have down here, we have the accounts payable. There's the accounts payable. So it added that $15,000. So now that's a liability. That's what we owe to somebody. We owe it to Epiphone, our major vendor that we purchase guitars from. If I open that up, then we're going to say, what is in there? What did QuickBooks make on it? So I'm going to zoom into it. I can't see anything here because we're in 2020 and I entered it as of 2019. So I'm going to go ahead and change the date to 2019 for the beginning date, then run that report again. Now we see a bill. So I scroll back over. There's the 15,000. They say it's a bill, Epiphone name, and then opening balance account. The other side's going to go to miscellaneous expense, which is an income statement or P&L, profit and loss report. That's funny because we didn't make a bill, right? So if I click on this bill, I'll say, well, what did QuickBooks do when I put that number into opening balance? it made the form of a bill. And basically, anytime accounts payable goes up, generally, the thing that makes accounts payable go up is a bill. So the bill is tied to the increase of accounts payable. So QuickBooks says you want accounts payable to go up, we're going to make a bill. So that's what they did. They made a bill. Well, and then you're going to say, well, what's the other side going to? What a category, what account did you put down below? And they put it into other miscellaneous expense. That's the account that they charge, rather than like the phone bill or something like that. They put it into other miscellaneous expense, and they put 15,000. Okay, so now we're going to say, well, let's close that out and see what the effect of that is. The effect of that will be on the P&L report. So I'm going to go back first. I'm going to go back here and say, now, is that a problem to me? It's going to hit the profit and loss. I'm on the balance sheet. I don't think so, because I entered it as of 2019, not the current year, 2020, and that amount is going to roll over to retained earnings as of the current time period I'm working on. So it's currently, you'd think, would be included in the 5,500. In other words, if I change the report date up top to, let's change it to 12/31/19 to 12/31/19, which is the date that we entered the beginning balance as of. I'm not going to run it yet, but when I run it, it's going to change retained earnings, going to move that down to net income. Just to show you, I'm going to run that report, and then we'll scroll back down, and now it's no longer in retained earnings, it's in net income. But it's in net income as of the last year, which is fine, as long as it rolls into retained earnings as of the current year, which I'm working on, then that's okay. Let's take a look at the P&L report and see if that's okay, see if the P&L report is something that's not a problem. I'll do that by going to the first tab first. And then let's go down to the reports down below. We're going to go down to the reports. We're looking for our other favorite report, that's being the P&L or profit and loss report. So we'll pick up the P&L, profit and loss, income statement type report. And as I open that up, I'm in 2020, so January 2020 to January 6, 2020, that's fine. I just note there's nothing here. Let's make the ending date the whole year, 12/31/20. Okay, so now we have the year that we're going to be working in. 2020 has nothing in it, and that's great. That's what I want. I don't want anything in 2020. These are the temporary accounts. I want to enter all these in, in the current year. Anything that I'm entering as of the beginning balances, I don't want it to mess up the P&L report, and we're doing that by entering it as of 2019 of the prior year. Let's take a look at the prior year then. If I go to 01/01/19 to 12/31/19 and run that report and see what QuickBooks did in 2019, you'll see then we're concentrating. Here's the 15,000 in other miscellaneous expenses. So again, that's funny down there because it is what it probably wasn't for miscellaneous expense. We probably bought inventory, but in any case, it doesn't matter because we got the inventory account correct because we entered that manually, and QuickBooks put the other side basically to equity. And then we have this account correct on the balance sheet, or not this account, but the balance sheet account is of accounts payable. And the other side went over here to the income statement, but it went to the income statement as of last year, which will then create the net income, whatever that will be, which will roll into retained earnings in the current year, 2020, which is fine. That's what we want. So in other words, this 5,500, if I go back to the balance sheet, is this 5,500. And then if I change the date up top to 2020, changing the date to 01/01/20 to 12/31/20, and scrolling back over and running the report, and then I scroll back down. So now it moved it into retained earnings. That's where it should be. So that everything looks good there as of the current period that we'll be working with. Income statement has nothing in it in the current period. If you want to look at the prior period, 2019, don't look at this QuickBooks file. It's not right. It's a mess. It's just got some weird data in it. You look at whatever other accounting system we were doing. But in here, as of January going forward, everything looks good and we're ready to roll forward. Now, if there's a problem and you have to enter this in the middle of the year for whatever reason, and you're saying, well, now I got this 15,000, it shouldn't be there, it should be in retained earnings as of whatever date you entered, then you could do a journal entry to remove it from here, meaning you could decrease this account. You'd have to do a journal entry debits and credits. You'd have to credit this account here and then debit retained earnings to remove it as of, in this case, the 2019, 12/31/2019. But again, you don't really need to do that because anything, as long as you enter it into the prior year and just say, hey, the cutoff is 1/1, January 1st, 2020, then QuickBooks will, in essence, wash everything out in the equity section. So notice our strategy. We're putting the beginning balances in for all of the accounts on the balance sheet for our beginning balances for whatever prior system we had, except for equity, and everything else is in essence going to wash out in equity. And then whatever funny accounts we have down here in equity, which will include opening balance being the funny account, we'll just do a journal entry to clean it out of there. And then it's got to be in balance, right? If we get every other account right, asset liability account, then the equity is going to be the difference for our accounting equation to be in balance. Everything else will wash out into equity, whether it does so by hitting the balance sheet, opening balance equity, or hitting the income statement for the prior year, 2019, and then rolling into the retained earnings account.